You probably didn't know this about mortgages in the UK, but it could save you a hell of a lot of money. So in this video, I'm going to break down the things you need to remember when getting a mortgage, especially while interest rates are high. Alright movers, welcome to the channel. My name's Perry Power. I'm going to take you through one major thing you probably didn't know about getting a mortgage in the UK, and I'm going to take you through the pros and cons. So, when getting a mortgage in the UK, there are 3 ways you can do it. Number 1, go direct to your bank. Number 2, you can go to an independent mortgage broker. But here's where it gets interesting. There are 2 types of independent mortgage brokers. One type searches the whole of the market, every single lender, and they may or may not charge you a fee. I'll come back to that in a minute. And the second way is you can go to an independent broker who searches a panel of lenders. There's a big difference in those 2 independent brokers, and I'm going to break down now those 2 differences and how making the wrong decision can cost you a lot of money. So let's jump in. Alright, so let's cover off the first one, going direct to your bank. I get it. There's an element of convenience going straight to your bank that you've banked with for the last 20, 30 years to say, hi, I need a mortgage. They've got all your information, they've got all your income details, they've got all your outgoings details. So it should be a lot simpler. But that's not always the case. It might be a bit simpler, but it could also cost you a lot more money in the long run. If there's a difference of 0.5% on the interest rate, arrangement fees, survey fees compared to a different lender, then you may be better off going with a different lender and having a bit more aggravation and headache in getting your mortgage secured. Now let's talk about the second option, going to an independent mortgage broker. And let's go a level deeper and look at the 2 types of independent mortgage brokers. And down in the description, I'm going to leave the details to my recommended mortgage broker who helps a lot of my clients. And I'm going to tell you why he's so good in a minute. So according to this definition, there are 2 types of mortgage brokers. Is there a difference between mortgage brokers? The main difference between an independent and a restricted mortgage broker is that an independent broker can recommend mortgages from across the market, while a restricted mortgage broker, here's the thing, can only recommend mortgages from a certain mortgage providers. That's huge, right? So although they can be called independent, they might only search 10 or 20 lenders, when potentially there's 200 to 300 lenders out there you could have access to if you went to a whole of market mortgage broker. And that's where a good broker will pay for themselves 10 times over. So let's say you go to an independent panel of lenders broker. He or she can only get the rates available from 10 or 20 lenders, which I guess is better than going straight to your bank, because then you've only got the one option, which is your bank. But if you go to a whole of market broker, they may charge you a fee, but they're going to look at every single lender. And that could save you, across the course of a 25, 30 year mortgage, thousands and thousands of pounds. Just a slight difference in the interest rate can save you a lot of money. So you're probably thinking, how do brokers charge? Usually they receive a commission from the lender for them passing that lender you as a client or a customer. That's not always the case though. So if you go to a whole of market broker, their goal is to find you the best deal. And it may be that they place you with a lender who doesn't pay them a commission, which is fine, but in that case, it's likely that the broker is going to charge you a fee. But that £200, £300, £400, £500, £600, £700 fee could save you £7,000 over the course of the mortgage term, versus the panel of lenders broker who only place you with this 1 in 10 lenders, and you're going to end up paying a lot more money over the term of the mortgage than 700 quid. So sometimes it's better to pay for the service to get a long-term better overall outcome than just to be placed with the lender that's going to give the broker the highest kickback commission and you don't end up with the best deal. So I said earlier, I'm going to let you know of my recommended mortgage advisor, and his name is Will Sharman. I call him the mortgage magician. He's helped so many of our clients and he's such a great whole of market broker, and he'll go and find you the very best deal. Which right now, with interest rates where they are, it's so important that you have someone look at every single possible lender in the market. Not so much of a problem when rates are so low. If you were happy with a deal and you could afford it quite easily, great. but when things are so tight right now, you have to make sure you're getting the best overall outcome. And that would include arrangement fees, interest rate, survey fees, porting fees, early redemption fees, all these kind of things. A good broker will take all that into account and give you the best advice for your situation. So there we go, a quick video on the importance of making sure when you're looking for a mortgage, you use a whole of market, independent mortgage broker. Hope you found it helpful. Drop a comment below if you did. If you didn't, like the video, subscribe to the channel, we've got loads more of these to come. Hit the bell icon, and I'll see you on the next one.